U.S. stocks are lower this Thursday after a much lower than expected durable goods read order, or how we're saying it, adorable goods, but they're not so adorable, Matt. We are a little lower today. Would you say that's a reaction to that number?
Yeah, it's surprising though. The market hasn't really responded to economic numbers like it did maybe a couple months ago. We've been more focused on corporate earnings, which is what the market really should trade on. So the adorable goods number, as you mentioned, coming in, below zero is not a good sign. But these numbers really aren't surprising. We'll see a revision to it, and that'll be probably more telling than the actual number that we saw.
We saw it was negative 1.1%, but like you said, Matt, it is earnings season, and there are some companies that are tied to this as they talk about tariffs, etc. Motor vehicles declined 1.6%. Now that was strongly linked to General Motors. Considering that the strike is still going on, does that Presage will get a worse read in the future?
But I think because sentiment becomes so negative and so pervasive in it, you have the chance to beat it on the upside with any kind of surprise. So if a company like GM or Ford came out and gave us a terrible reading for their forecast for the future, the expectations become so low, becomes much easier to beat. So this is the time to do it if you're going to do it. They're going through a lot of different issues with the union and things. When they get that solved, then they have a chance to really outperform.
So would you say this would maybe be a nice opportunity to get into the stock?
Generally, that's what I'm going to look for as an investor. I'm going to look for an opportunity to buy on weakness. If you believe this weakness is something to buy on, that they can overcome this, then yes, this is a great opportunity to buy because, the autos have underperformed.
Buying on weakness, that is a very strong strategy. Now, we also saw weakness in computers, in computer orders, almost 1%, Matt. The Best Buys, Hewlett Packards, those are down today. What do you think about their price action, considering isn't this the bread and butter of those companies?
Yeah, when you think about when you usually buy a computer, if you have kids, you're buying it in August before school season starts. But people, I think, move their orders up earlier because they anticipated this China-U.S. trade war to continue and maybe prices would be affected dramatically by it. So that might just be a case of we saw people buying in advance way before this quarter, and that's why these numbers could be down.
Okay, so buying in advance. Now, some economists, they suggest that no matter what tariffs do, no matter how much something is, the consumer is going to buy what they want to buy. Are you seeing any sort of movement out of computers and into something else?
Well, we haven't certainly seen it in retail, right? I mean, retail's been kind of sluggish, and especially, the old brick and mortar retail, really hasn't suffered. We'll find out more about retail tonight. Amazon.
Yeah.
That's the all-encompassing one, whether it's going to be through their AWS or their one-day delivery or, whether it's just retail side of it. We're going to find out pretty good scope of what the mainstream retail side of it looks like. So have we seen them move from computers to something else? So they're certainly not buying cars, right? So what are they buying? Maybe they're waiting to the Christmas season. Maybe this is going to be a banner Christmas season. If we get some kind of deal done or tariffs are, held back for a little bit of time, maybe this will be an enormous opportunity to buy from Thanksgiving to Christmas with all kinds of sales and people with money in their pockets.
Great point about Amazon. I mean, the externalities that have emerged from that one, and maybe that could be why we're seeing, this shift in durable goods and economic data. But all in all, Matt, considering everything, CEO confidence has fallen to a lowest level in a decade. Now, we had two CEOs step down this week from Under Armour and Nike. Those companies are closely tied with business in China. Is this some sort of coincidence?
I don't think it's a coincidence, certainly an indictment on what they're expecting out of the government. But again, at this point, you cannot use China as an excuse anymore. We're past that. You've got to find a way to manage your business despite that. And the companies that have done that have been rewarded on their earnings, rewarded as far as investors getting back involved. So, yes, it's definitely a time where CEOs are up against it. And there's no doubt about it. They're saying and they're asking for help from leadership in Washington to get this done. However, that doesn't mean that you are absolved from that. Eventually, companies, you saw Texas Instruments come out and say, we reported a bad quarter and our outlook is not good. Well, it only is going to stand for a quarter or two. You need to produce. regardless of what expectations are. You've got to produce and you got to find a way. So I'm not envious of the role that CEOs are on because they've got to find a way to maybe change their business model to not be so reliant on China, which has been hard because that was such easy money for a while. It is what it is. But to see, Under Armour and Nike CEOs both resign, and they are heavily tied to China, as you mentioned, in the same week, that's really coincidental.
I thought it was kind of funny how Kevin Plank, the CEO or ex-CEO of Under Armour, how his last name is Plank, he was doing planks and now maybe he was walking the plank. Who knows? But anyway, Matt, thank you so much. We love talking to you on a Thursday. That is Matt Cheslock from Virtu Financial.